Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're covering excess Ira contributions and application of the excise tax. If you need a year-end update, Spidell's Federal Tax Update webinar will cover individual, business, and investment issues such as new proposed RMD regulations, the expanded business interest limitation, and more. Visit Spidell.com and click Webinars for more information and to register. Taxpayers who make Ira contributions in excess of the amounts for the taxable year are subject to a 6% excise tax on those excess amounts. Taxpayers can avoid the excise tax by withdrawing their excess contributions, plus any related earnings, by the due date of the taxpayer's return, including extensions. Excess Ira contributions from one year can be treated as contributions in a later taxable year, but the 6% excise tax applies to each year the excess contribution remains in the IRA, unless the excess contribution is applied to the following year's contribution limit. This correction occurs automatically for any year a taxpayer doesn't contribute the maximum amount allowable to their IRA. The excise tax is calculated on IRS Form 5329, and the calculation of net earnings on excess contributions is computed using Worksheet 1-3 from IRS Publication 590-A. For excess contributions that are withdrawn after the due date of the return, the income earned on the excess contribution that is withdrawn is generally included in gross income. An excess contribution cannot be applied to an earlier year even if the taxpayer contributed less than the maximum amount allowable for the earlier year. But it may be possible to apply it to a later year if the contributions for that later year are less than the maximum allowed for that year. As an example, assume that Kay earned $3,000 in salary in 2021 and contributed $5,000 to an IRA, and she didn't withdraw any amount after the contribution. She has an excess contribution for 2021 of $2,000, and she'll pay a penalty of $120 for 2021, which is 6% of the $2,000 excess contribution. In 2022, she earns $15,000 in compensation and makes a $1,000 contribution to her IRA. Kay will be treated as having made an additional contribution of $2,000 for 2022, and she'll be allowed to deduct $3,000 as her 2022 IRA contribution. The 2021 excess contributions are no longer subject to the 6% excise tax because they were essentially converted to a regular contribution for the 2022 taxable year. When performing the calculation of earnings that have to be withdrawn from excess IRA contributions, take into account any loss on the excess contribution while it was in the IRA. If there's a loss, then the net income that's withdrawn can be a negative amount. So in Kay's case, if she had a loss of $100 on her $2,000 contribution, she'd only have to withdraw $1,900 from the account to avoid the 6% excise tax. The calculation to determine net income or loss on excess IRA contributions is the same for excess Roth IRA, SEP IRA, or simple IRA contributions as well. One thing to keep in mind is that if the statute of limitations has expired on the year of the excess contribution and a deduction was taken for the contribution in that year, the excess contribution is instead remedied by reducing the allowable deduction for the later year. You can also stay up to date with tax news at Spidell's quarterly Federal Tax Update webinar. The next session is on October 26th, and you can register for that single session or the full series of 4 at Spidell.com under Webinars. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.